me discuss about the Bollinger Band squeeze. What happens is that after a sharp up move, the Bollinger Band actually gets into a situation where the price range becomes narrow. There is a sharp up move or sharp down move, and after that we can see that there is a period of low volatility. The Bollinger Band width, that is the distance between the upper band and the lower band, becomes much smaller during that point of time. But after the low volatility period, what happens is that there is either a breakout or a breakdown. So in most of the cases, what happens is that suppose there was an up move, there is a period of low volatility, and then again the up move resumes. There can be a reversal also. Similarly, in the case of a down move. So on those breakout or breakdown, someone can take trade with the stop loss. Here, let us look at an example. See, first there was a very good up move, then there was a period of low volatility, and the Bollinger Band width was actually shrinking. Now, this is a very important point. You have to understand the concept of Bollinger Band here. The 2 sigma, that is the standard deviation, that is on an average how much the price is moving away from the mean increases if the price range increases, but the range actually shrinks when price become range bound. So that is what it is happening. Now when there is a range breakout, see, there was a good opportunity to go long here with the stop loss just below the range, and see how beautifully the range actually broken out and the price moved higher. Not only that, once the range was broken out, see, there was a retracement, and again at the support line, that is the neckline of the range, the price came back, and then the price again from that support level went higher. Here you can again see that there was a consolidation and breakout. Again the price came back and took support initially, and then gave a small bit of rally, not a small 4-5% kind of a rally. So that is how the squeeze points in the Bollinger Band become very important. Now another way we can use the Bollinger Band is to look at the pinches. Now what are pinches? Let me show you with the example. Right now let us go into Reliance Capital chart. So here we are looking at Reliance Capital chart. Now as this stock moves very unidirectionally, one period after another, first there was a unidirectional up move, and then there was a rest, and then there was a up move, then there was a rest, then there was a down move, then there was rest, then there was down move. So you can see that in such kind of movements, up moves and down moves happen in form of bursts. First there is a fierce move, and then there is a small consolidation. During that kind of situation, the Bollinger Band actually converges to small pinch kind of a formation. Here you can see a pinch, here you can see a pinch, here you can see a pinch. So once the pinch is there, then one should look at that in what direction the breakout or breakdown is happening. So it is much like squeeze, only the thing is that the pinch is relatively smaller time period. It takes a much smaller time period to form a pinch, and after the pinch is broken out, the up move or down move that happens is even more fierce than what happens normally in the case of squeezes. So here, as we can see, time and again, due to these sharp up moves or down moves, these pinches are forming due to small consolidation, and once they are broken out, they are actually giving very good profit. The beautiful thing about a pinch compared to a squeeze is that in the case of trading a squeeze, your stop loss can be a little bit on the higher side. But in the case of a pinch, your stop loss is very low, just below the lower end of the pinch. This is a small area. And once the breakout is happening, see how fast and how far the price is going. So this is another important way to use the Bollinger Band is a volatility indicator. We have seen 4 pattern kind of way in which we can use the Bollinger Band. First is the M top, then W bottom, then the squeeze, and then the pinch. Apart from that, during steady up move, what happens is that price many a times come close to the mid Bollinger line and give good entry points in the long, and during the downward direction give good entry points near the mid Bollinger line during the down moves. And another important point is, if there is a fierce up move or down move, we should understand that the market normally hugs the lower Bollinger line if there is a sharp down move and the down move continues. In such a situation, it is ideal to go short with the stop loss above the previous candle and remain short for a substantial amount of time, because the price move is very sharp. Similarly, for the up move, see, the price is hugging the upper Bollinger line, so someone can go long with the stop loss with the low to previous candle's low and actually enjoy a very sharp up move. So this is all about Bollinger Band. This is a very useful indicator. You can use the slope of the Bollinger Band, mid Bollinger line, the Bollinger Band width, the way to indicate the patterns. So many ways, it is a very beautiful indicator. You can use it in various time frames, in daily, in hourly, in 15 minutes. So you should be sure that for any particular move, which Bollinger Band you should be using, because in a trending move, normally what you would see is that any particular time frame Bollinger Band is acting as a support. So you should identify that. For example, let me go to a Nifty chart here. Again, we have shown the Nifty chart in the beginning. See, initially during this up move, the mid Bollinger line was in the daily chart acting as a support. Now let us look at the latest up move that was happening, and I will go to an hourly chart. And in the hourly chart, you can see how the hourly mid Bollinger line is acting as a support for multiple number of time. So that is the importance. So we can go to a 2-hourly chart. Let me go there and see the 2-hourly mid Bollinger is giving a better sense of this move, because the support is near the 2-hourly mid Bollinger. In the previous down move, see, the 2-hourly mid Bollinger acts as resistance. So when you are looking at a move, try to fit in with a trending move, obviously, try to fit in with the correct time period Bollinger Band. And if you see the price only in one particular side of the mid Bollinger line, then you can actually devise your trading strategy according to that and get into low risk trades. So thank you very much for watching the video. In our next video, we will come up with one more indicator.